Welcome to the February 2025 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. Global GDP growth for 2025 is projected at 2.8%, reflecting heightened trade policy uncertainty. Newly imposed and planned US tariffs, along with retaliatory measures, could potentially disrupt supply chains and global trade. Looking ahead to 2026, the economic outlook is slightly more optimistic, with the global GDP growth forecasted at 3.2%. At a country level, US GDP growth for 2025 is forecast to slow to 2.4%, driven by new and proposed US tariffs, including the recently imposed 10% tariff on all Chinese imports. In the euro area, economic activity remains subdued, with GDP growth forecast at 0.9% in 2025. China's economy is expected to grow by 4.6% in 2025, supported by fiscal stimulus. Meanwhile, India's GDP growth is forecast to remain steady at 6.5%. In January 2025, EU gas consumption remained stable at 42 BCM, matching the level of the previous year, and marking the fifth consecutive month without any decline. The current level of consumption was driven by the power and residential sectors. Colder-than-average temperatures led to a surge in residential and commercial gas consumption for heating needs. In addition, the occurrence of the Dunkelflaut coupled with lower hydro output led to a greater dependence on gas-fired power plants to stabilize the electricity grid across the region. Total electricity production in the EU grew by 4% year-on-year to reach 240 terawatt-hours. Gas-fired electricity generation experienced a notable increase of 5% year-on-year, offsetting lower outputs from hydro and wind. In December 2024, China's apparent gas demand recorded its first decline after more than 20 consecutive months of growth, contracting by 1.3% year-on-year to 37.7 BCM. Gas-fired power generation declined by 2% year-on-year, as increased output from nuclear, wind, solar and hydro sources reduced reliance on gas. A milder winter in northern China also contributed to lower demand for natural gas. In Beijing, average daily low temperatures in December stood at -4.5 degrees Celsius, a significant rise compared to -7.6 degrees Celsius in the same period of 2023. In January 2025, US gas consumption saw an increase of 7% year-on-year, reaching 111 BCM. Gas-fired power generation grew by 2% year-on-year, while the residential and commercial sectors experienced substantial gains of 15% and 14% year-on-year, respectively, driven by colder temperatures. In December 2024, global gas production was estimated to have recorded a modest 0.2% year-on-year growth, to stand at the level of 365 BCM. Africa, Eurasia, and the Middle East showed a positive production variation and counterbalanced the decline in other main gas-producing regions, including North America, which witnessed the greatest decline, driven by lower gas output in the US. In December 2024, European gas production recorded a 5% year-on-year decline, reaching a total output of 16.7 BCM. This is the second consecutive month to witness a reduction in European production, driven by the reduced gas output in Norway, along with the continued decrease in UK and the EU. However, the magnitude of the production decline was limited by the rise in Turkey's gas output. In December 2024, China's gas production rose significantly by 8% year-on-year to reach 21.8 BCM. Coal bed methane production slowed down its continuous growth to stand at a level of 1.3 BCM, with a 5% year-on-year reduction. In January 2025, US total gas production witnessed a rebound from the declining trend over the past months to record a growth of 0.5% year-on-year, and culminate a monthly output of 91 BCM. This increase reflected the combined effect of the growing demand in the US in January, as a result of the cold weather, along with the rebound in the Henry Hub gas prices, which created favorable market dynamics. In January 2025, there was an expected decrease in EU PNG imports, in line with the expiration of the Russia-Ukraine transit agreement. the region imported 12 BCM, which was 10% lower year-on-year. Norwegian supply to France declined by 40% month-on-month as colder temperatures increased demand in the UK instead. The interconnectors exported 0.4 BCM of gas from the European mainland to the UK. In December 2024, China imported 6.0 BCM, an increase of 4% year-on-year. This was driven by Russian supply via the Power of Siberia pipeline achieving full capacity ahead of schedule. In January 2025, global LNG imports totaled 38.9 million tons, marking a slight 0.3% year-on-year decline. The drop was led by the Asia-Pacific and North America, partially offset by increased imports in Europe and the MENA region. A TTF price premium over NEA spot LNG redirected US LNG cargoes to Europe, where imports surged to their highest level since April 2023, driven by reduced pipeline gas flows and higher heating demand amid colder weather. Meanwhile, Asia-Pacific LNG imports declined due to weaker spot demand, mild winter conditions, and a negative JKM-TTF price spread. On the supply side, global LNG exports grew by 1.8% year-on-year to 37.8 million tons, supported by higher shipments from Angola, Indonesia, Malaysia, Mexico, Mozambique, Qatar, and the US. In January 2025, there were 18 BCM of net gas withdrawal in the EU to satisfy winter heating demand. At the end of the month, the storage level decreased to 56 BCM or 54% of the region's capacity, which was 6 BCM less than the 5-year average. In Asia, combined LNG stocks in Japan and South Korea decreased to an estimated 12 BCM, which was 2 BCM more than the 5-year average. In the US, the average daily storage level decreased to 85 BCM, or 63% of capacity, which is 3 BCM above the 5-year average. In January 2025, the TTF spot price averaged $14.76 per million British thermal units, reflecting a 7% month-on-month increase, while the Northeast Asia spot LNG price averaged $14.11 per million British thermal units, showing a 1% month-on-month decrease. In Europe, cold spells and low wind speeds drove up gas demand, while unplanned gas production outages in Norway reduced supply. Meanwhile, in Asia, ample LNG supply and high storage levels pressured prices downward. As a result, TTF traded at a premium to Northeast Asia spot prices for the first time since June 2023. In the US, the Henry Hub spot price surged by 40% month-on-month, averaging $4.35 per million British thermal units. Looking ahead, weather-driven demand is expected to remain a key factor influencing spot price fluctuations. Thank you for watching this short video presentation on the February 2025 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.